We've been talking a lot about earnings today. Fitness brand Peloton is falling after the company reported widening losses and slowing revenue growth. Joining us now to discuss is Key Advisors Group co-founder Eddie Ghabour, who has been watching this stock. Now, are you a holder of this stock?
I am not. I'm not a holder of Peloton stock at all.
And why are you not interested in Peloton then, I guess I should ask?
I find that Peloton is, look, they're going to be really based on how strong the consumer is. They're in a space that's extremely competitive. I worry about it being more of a fad than anything. And being that they're in the beginning stages and trying to get to profitability over the next few years, my concern is if we go into a recession in the next few years, is that consumer going to continue to put the money into Peloton? So I find it as a very competitive space, and I just think as though it's going to be many other better places for me as an investor to invest my dollars.
We weren't going to talk about Casper, but I got to ask you because you talked about startups, and here's Casper trading. It's off to a good day today. I was going to ask you where would you put your money, but do you have any advice for people who are putting the money into Casper right now?
So look, the retail investors that are watching right now, the problem with the IPOs is many times when they come out, there's a lot of hype and you see that huge spike. The last thing I want to do is jump in after a 30% move or 25% move. So I don't know anything about the company itself in regards to its financials or whatnot, but it's a little bit more of a speculative play. Call me a boring investor that likes to invest in companies with profitability.
Going back to Peloton, is a pricing issue? In other words, if they brought down their price point, would that make it that much more attractive to you? Because the consumer is strong. They continue to spend. And if the consumer makes up 70% of our economy and unemployment stays low, they'll continue to spend even more, presumably on health-related areas. Peloton fits that void.
I agree 100% with the consumer. I think it's as strong as you can see in many, many years. And that's why I'm so bullish on the equity markets. I think Peloton's challenge is retention, long-term retention, because of the competitive space is when the next person comes out with the same thing as them jumping from Peloton to a competitor. Yeah. That's my concern long-term for that company.
Another stock that we've been talking a lot about today, earnings-wise, is Twitter. Here you have a different situation. The stock is going up, perhaps because expectations were low, as we were talking about with some analysts. How about this one? Is this one in your portfolio?
It's not in my portfolio either. But Twitter, what an impressive quarter. You know, they hit $1 billion of revenue in the last quarter for the first time. I think the biggest part of this story is the amount of users that continue to go on Twitter. Look, Twitter is becoming more and more of an avenue for people to go to get news, research. I utilize it all the time just to see what people are saying in regards to different equities and other analysts in regards to what they're saying, and it's a great resource.
Do you think they can consistently have that kind of revenue, given that they're not going to accept political advertising, especially with this is the year?
That's a bold move from a business perspective, right? Because I think that's going to be challenging for them, especially with the amount of money that's probably going to be spent in this election. It's going to be an election year for the ages, and it's going to cause a lot of volatility and a tremendous amount of revenue that they're losing. So I think if they can monetize the amount of users that are continuing to grow, that the future should be pretty bright for Twitter.
All right, let's take a step back from these individual stocks. We just talked to a guest a few moments ago who was talking about companies and coronavirus, and that we have seen a surprising sort of brush off, in his words, of companies in their earnings reports and commentary. What do you think here? Is the market underpricing the risk from coronavirus?
I think they absolutely are. And the reason why is it is too early to really see how much of an impact it's going to have. I am not convinced that it's not going to be negative for these multinationals. I mean, China is pretty much shut down right now. If you have exposure to China and you're relying on revenue coming from that space, again, you're going to get hurt, especially if this lasts for a couple of months. So the multinationals that have exposure to China, I think their earnings are going to take a hit from it. I do think it'll be short term. I did come into the year being very bullish, thinking that we would see some double-digit returns in the equity space because of where we are with interest rates, the consumer, to your point. Yep. So I think it can be a very, very good year again for equity markets, barring some type of black swan event.
Eddie Ghabour from Key Advisors Group co-founder. Thank you.
Thank you.